Well, so what are the potential effects of growing tensions between Russia and the United States, a so-called Cold War, on markets and investing? We saw big effects in the past when there were escalating tensions between the two countries. Well, what's the case today? For some answers, let's go to Todd Horwitz, Chief Strategist at BubbaTrading.com. He comes to us from Chicago. Todd, great to have you on the program. Give us your top-line analysis here. Is this a kind of, again, another piece of risk being baked into the global pie? We already got problems in Europe. We got Brexit. We got a U.S. election that's going from one surprise to the next. Is this another reason to kind of be risk off if you're looking at asset appreciation over a period of time?
Hi, Roger. Yeah, I think when you look at the overall picture, there are all the troubles you explained and more to the point. A lot of this relates to, even though the professor doesn't call it a Cold War, markets repeat themselves, cycles repeat themselves, and we're seeing so much tension here. And it's not just the tension between the cyber warfare. There's things going underneath with oil, with commodities and products like that, which are creating a lot of troubles here. And really what's happening is you're seeing the rise of the U.S. dollar against more of the global currencies, which is creating a lot of pressure on our economy here, which I think will eventually push us significantly lower as we go through. So I think there's a whole bunch of things going on here that are all repeatable that have happened in the past, just under a different view.
Todd, there's that old saying, nationalism is the last refuge of the scoundrel. Do you think something like that's happening? We know what's happening in Russia. Putin is using this kind of tough rhetoric to drum up domestic support. Is there a risk that a kind of slow and sluggish U.S. recovery kind of prods U.S. political culture towards its own chest thumping to distract public attention from, pocketbook issues?
Well, it's funny because I think some of those things are going on here now as we speak, and I think this has a lot to do with the overall financial manipulating and engineering throughout the central banks throughout the world, which are kind of creating one class of people, which is more related to almost communism now. You're losing a lot of the free market movement, and that's becoming a much bigger problem as we look through. We don't have true free markets because each and every time somebody will step in, either from here, the Fed, or globally from another central bank. And in fact, this week we've got the Bank of Japan, the Fed, and the Bank of England all discussing this week economic policies, which are really just a way of saying, how are we going to continue to have our citizens pay more tax by creating more inflation so we can take more money out of their pockets? And I think that's a bigger problem that will also create the problems that we're looking at, which will cause the markets to actually collapse here pretty soon.
So if you feel that it's a kind of risk-on moment, what's the investment strategy here? Are you kind of looking at base metals? Are you looking at the proverbial doomsday plan here? Is that how you insulate against risk?
I do believe the markets are going to have a major correction. Personally, I'm a guy that knows how to hedge, and I hedge my portfolio. But for an investor, I think you want to look at a percentage. And again, don't go crazy on any one investment, but everybody should own a representation of gold and silver. Why? Because if interest rates don't rise, if the United States doesn't hike, and they actually go back into a QE or a negative process, that is going to collapse the dollar and make the metals worth a lot more. So metals are a great place to be here. Commodities are a great place to be here. Commodity stocks. Why? Because they're consumable goods that we're going to have to use. We're not manufacturing, we're growing them. So we have to be able to use those. So I'm a big buyer right now, and I'm a big fan of the commodity space. I think that's a place I want to be. And I think that you look for those types of opportunities of items that have been beaten down based on what's going on, but products that we're going to have to use and that are going to be consumables or be able to use for some sort of currency at some point, or to be able to get appreciation on your dollars. We know with the fiat currency system that there's too much manipulation there, and really every time they make some sort of a move, what they're really doing is they're issuing a secondary on your cash and reducing the value of what you're holding in your pocket. So those are issues that can't be.
Todd.
Yes, sir.
We got it. We ran up against time, but thanks for coming on the show today. Let's do it again soon.
Thank you so much.